Hi guys, you all can hear me, right?
Yeah, yeah, clearly.
Okay.
Am I audible perfectly?
You are Sagar. If you have AirPods or earphones or something, that will help. That will make your voice more clearer.
I don't have it connected to the computer, sorry.
Okay, it's
I'll speak,
fine. I can
yeah,
hear
I'll
you.
speak a bit louder then, yeah.
Yeah, yeah.
Okay.
Sagar, this is purely GCC, right? Today.
Yeah, most of them, yes.
Okay. So in the intro, should I mention GCC or should I avoid?
Uh, that Mihir will be better to answer.
Okay.
But I think they have marketed only in GCC, but in the queries, I saw some other queries as well.
Hi, everyone. For those of you who've joined the webinar, we'll be beginning in the next 5 minutes. So please stay on with us. We're waiting for some more attendees to join so that we can commence and everyone can make the most of it. So bear with us. We'll begin in 5 minutes. Oh, and guys, we are live on YouTube as well. So if any of your friends and family who couldn't register earlier for this webinar, they want to watch it as well, please go to our YouTube channel, which is Grow NRI, and you can watch this entire webinar live there. You can also ask us questions live on our YouTube stream as well. So if you want to spread the word, please do it. Please send it across to your friends and family and ask them to join in as well on YouTube if they couldn't be here today. We're live on YouTube as we speak. Interesting to see that we've already started getting some questions also on YouTube. So we will address your queries, questions, any doubts that you have at the end of the webinar, even during the course of the webinar, actually. But yeah, just in a couple of minutes, we'll start. So hold on to the stream. Guys, also you may not be able to access the chat section for posting your questions. So request you all to go on the Q&A tab and then ask your questions, whatever you want to ask us there, because I will be able to see that and our guest speaker can address those queries. So please go to the Q&A section, not on the chat section. You won't be able to access that. Okay, guys, thank you for your patience. And we're officially starting this webinar now. And this is going to be all about taxation and compliances for NRI. So brace yourself. We have a very, very exciting lineup and agenda for the day. And before that, let me quickly introduce our guest speaker. It's Sagar Soman, who is a chartered accountant. And let me give you a bit of a background about him as well. Um, he is an NR or was an NRI himself, and he has a significant proficiency in NRI taxation, cross-border investments, FEMA compliance, and income tax advisory. And as somebody who has been on the other side of things, who's been staying abroad for some time and who had to adhere to all the regulatory norms and compliances back home in India, he can give a better perspective. And we couldn't think of anybody better to join us today on this topic. So, Sagar, thank you so much for taking time out and chatting with us.
Thank you, Karunya.
So, let me quickly set the agenda right before we begin. Obviously, as an NRI, we'll talk about what makes one an NRI, what the residential status is, what are the rules and regulations for that, different types of bank accounts for NRIs, income tax, various aspects of it, investment options in India. And of course, we will do the FAQs and address our viewer queries as well. But anything that I may have missed or anything you would like to say before we begin?
No, I think, we will cover all these aspects in a flow, and then as and when there are any queries relevant to that topic, we can take them as we finish that.
Absolutely. So let's get started. You have, I know you've prepared a very extensive presentation for our viewers. So let's kick that off.
Thank you. I hope my screen is visible.
Yeah.
So first of all, a standard disclaimer before we start the presentation, that this is for information purpose only, and before you take any decision based on this information, you need to consult a professional. By the end of this presentation, you will be able to determine your residential status as per FEMA and income tax. You will understand the different types of bank accounts that NRI can hold, the various income tax aspects for NRIs, investment options available, and also we will take FAQs and your queries as well. So I'm sure everyone is aware and excited about the India growth story and the phenomenal returns that Indian markets are offering right now. So I'll just quickly scroll through these slides. Now, the first question that comes to your mind is, as an NRI, who all can participate in the Bharat growth story? Who all can invest in India? So there are three categories. First is an NRI who has an Indian passport. He can invest in India. Second is a overseas citizen of India who has an OCI card. Even they are welcome to invest in India. And third is a PIO. Even they are allowed to invest in India. So let's start with the residential status, which is the most important topic. Residential status in India is defined by two laws, FEMA and Income Tax Act. Now, basic understanding of both of them is very important to know what they imply and how it matters to you. Income tax law is a revenue law which is concerned about your taxation, how do you calculate it, and then how do you present it, what sort of disclosures do you need to make to the income tax authorities and all. Whereas FEMA is a stricter regulatory law. So think of FEMA as a gatekeeper to your financial playground. FEMA will determine what all things you can do as an NRI or what forex transactions can you take. So and then in income tax, there is a concept of previous year. So at the end of every financial year, you go back and check for the last previous year, like it is called a previous year. For the last financial year, you go and check whether you were a resident Indian or a non-resident Indian, or RNOR, which is a transitionary kind of concept. So you calculate your status, and then based on that, you have to report certain income and pay tax on that. So that is how it works for Income Tax Act. Whereas in case of FEMA, the purpose is very important. What is the purpose for which you left India? That determines your residential status. So we'll come to it in the next slides. Residential status, as I said, you have to check for the previous year in income tax. So it is checked for the complete financial year. So for every financial year, your residential status will remain one, either a NRI, RNOR, or ROR, whatever, but it will be always one. Whereas in FEMA, it has to be checked at the date of you doing the financial transaction. So what all transactions can you undertake if you are a NRI or if you are a resident Indian? All those things you have to check on the date of transaction. So as per FEMA, you can be a resident for a part of the year, NRI for the other part of the year. And the purpose of income tax is just to determine your taxability and the disclosures. Whereas as per FEMA, it governs all your financial transactions like mutual funds, shares, bank accounts, what type of transactions can you undertake, everything. Now, these are three special circumstances wherein under FEMA, the moment you leave India, you become a resident out of India. That is a NRI. So these are these special three instances. If you are employed outside India or leaving for uncertain period, for example, a spouse of a person employed outside India. Second is for starting a business outside India, or third is for a student who is going for studies abroad. So in all these cases, the moment you leave India, you become a non-resident. So the best thing is to do your KYC before leaving. For others whom that purpose does not apply, for them, what the law says is, if during any financial year, if you were in India for 183 days or more, then you become a resident Indian as per FEMA. If not, then you become a resident outside India, which is basically NRI. Now, what happens when you become a non-resident as per FEMA? What are your obligations? First of all, you don't need to take any permission from RBI or income tax authorities. you're not allowed to maintain a resident saving account. So you have to go to the bank, do your KYC as a non-resident, and automatically your saving account will get converted to NRO account. Third is similarly your demat accounts you need to redesignate as a non-resident demat account. And fourth is do not confuse your residential status as per FEMA with income tax. You have to correctly check your income tax status whether you're a resident or a non-resident and disclose that in your income tax return. Now, as per Income Tax Act, your period of stay in India during the previous year matters. Previous year and the 4 years prior to that is what determines your residential status in India. For example, if you were in India for 182 days or more in any financial year, then you become a resident Indian. Or if you were in India for 60 days or more, plus more than 365 days cumulative for the 4 years preceding that, still you become a resident Indian. Now, once you are designated as a resident Indian, you need to disclose all your foreign assets and you need to pay tax on all your global income. So this is very important. If you are a resident Indian, you have to disclose everything, whatever you hold, even outside India, and you have to pay tax on that as well. If you have already paid tax outside India, then you can claim DTA relief. We will come to that later on. Now, these are some of the dates. If you are moving out of India or wanting to relocate to India, then what dates should you remember for optimal tax strategies? We have outlined those. If you have taken up employment outside India, or if you are starting a business outside India, if you want to go leave India for an uncertain period, and if you don't plan to visit during the same financial year, then the best time to leave would be on or before 28th of September. That will ensure that you are a non-resident for that same year. And what will happen is your global income won't be taxable in India. So only the India's part of income you have to pay tax in India. And for the other income, you go to whatever country and pay tax there. So for optimal tax planning, if you're leaving, leave before 28th of September. Similarly, if you're trying to relocate back to India, then after a long time, if you're coming to India, then if you have been frequently visiting India to sort of do the relocation process or wanting to set up any business in India or whatever reason maybe. So in the last 4 years, if you have come to India for more than 365 days, then you should arrive after 2nd Feb, so that during that year you are a NRI. Or if you have not come frequently for the last 4 financial years, then you can come after 3rd of October. So that will ensure that you are a non-resident during that particular year. And since you are a non-resident, your global income won't be taxed in India. Only the Indian part of income will be taxed.
Sagar, before we move on to the next segment, there's one question coming in from Christopher Anthony. He is asking whether it's necessary for an NRI working in Gulf countries to file an ITR in India. So, of course, you've already given us the details about who is an NRI and what are the liabilities essentially. But the same applies to Gulf countries as well, right? I mean, if you could give him some clarity.
Indian Income Tax Act does not discriminate between resident Indians and non-resident Indians. It says if your taxable income without taking deductions is more than the minimum exemption limit, which is 2.5 lakh rupees, then you are mandatorily required to file an income tax return. So, and then we will come to that part later on also, that why is it advisable to file your return even if your income is zero or very less, just to have that continuity or just to have a track. Why is it essential? We will come to that in a later slide. Shall we move on to bank accounts?
Yeah.
So these are the three major type of bank accounts which you should be aware of as a non-resident. First is an NRO account. Second is NRI account. Both of these are rupee denominated. And the third one is FCNR, which is a forex denominated account. Now, NRO account is just like an Indian saving account, but with a NRI KYC. So, and there are certain restrictions on NRO account with regard to the remittance abroad. And it is a non-repatriable account. Second is NRI account, which is for basically if you want to invest in India, you can send your money, convert it to rupees and then invest in the Indian market, and it is a freely repatriable account. So that is the use of a NRE account. Whereas NRO account is basically used for your Indian income, like rental income, or if you want to do certain expenses, maintenance of your relatives, upkeep of your property or anything. So for that kind of purpose, you can use the NRO account. NRE is more of a repatriable account for investment purposes. And the third one is FCNR, which is basically a term deposit account. I'll come to the characteristics of all these accounts in the next slide. So, NRE and NRO account, as I said, is a rupee denominated account. These can be saving account, current account, term deposits, or recurring deposits. Whereas FCNR can only be a term deposit account. The deposit in these accounts for NRE, it can only be through a foreign currency. In NRO account, as I said, your rent can also come in, your interest income and all can also come in. So it can be in INR or foreign currency. Whereas for FCNR, it is foreign currency denominated only. So it is only foreign currency. Now withdrawals, since these two are NRE and NRO are rupee denominated, so it is in Indian rupees, whereas FCNR is foreign currency. Nomination is permitted for all. The period of fixed deposits in NRE is minimum 1 year, maximum 3 years. For FCNR, it is minimum 1 year and maximum 5 years. Whereas for NRO, it is just like a saving account. Now, interest is not taxable in case of NRE deposits as well as FCNR deposits. Only in case of NRO deposits, the interest is taxable, and that there is a TDS applicable, which is at the rate of 30% plus surcharge. So there is no minimum exemption in this as well. In case of repatriability, the interest that you earn is freely repatriable in all the cases. Repatriability of principal, NRE is freely repatriable, FCNR is freely repatriable, but NRO is subject to USD 1 million limit per annum. There is a special scheme, USD 1 million per annum scheme. We will come to that in the next slide. I'll explain in detail on that. The joint accounts are permitted with NRIs for all the categories, whereas joint account with Indian resident is permitted only with relative for NRE and FCNR, and in case of NRO account, it is permitted. So this is a very common question by all the NRI clients, that if they are holding a saving account in India and they have become an NRI, do they need to close that saving account, or can they maintain it, or do they need to mandatorily convert it to NRO account? So what the law says is that if your residency status has changed to NRI, then you have to redesignate your saving account to NRO account, and that has to be done within a reasonable time. But what is the reasonable time is not defined. So whatever is the best possible earliest time, you should do it. Secondly, there are penalties, severe penalties if you don't do it. I know many of them would be having saving account. So there are large number of cases where people do maintain saving account, but as per FEMA, it is not allowed. So the best thing is get it converted to NRO account. Conversion is very easy. You just need to update your KYC with the bank. They will redesignate your account to a NRO account. That's it. This is the USD $1 million scheme per year. If you have any deposits in your NRO account, it can be through sale of property or any other proceeds like rental income and whatever balance you may have in NRO account. If you want to transfer it outside India, if you want to remit it, there are certain compliances to be done. Once you do that compliances, you can you can remit the money out of India up to $1 million per annum per PAN card. So it's around 8.25 crore every year you can move out of India. Any questions for this, Karunya, or shall we proceed?
Well, actually, there was a question that I wanted to flag off. Santosh Raj is asking if for NRO account, taxability is for your account or for your fixed deposit. Could you shed some light on that?
Yeah. So in India, the tax is only on your income, not on your principal or anything else. So if you're generating any sort of income like interest, then the tax is on that interest portion only. So if you have made a fixed deposit in the NRO account, then on that interest, there will be a TDS. It won't be on the principal.
Okay, I guess with respect to, I think this section, this is the only question we have which is relevant for banking. I think we can proceed.
Okay. Taxation in India. these are some of the impressive statistics of the e-filing portal. Indian income tax has become very tech savvy nowadays. As you can see, last year around 8 crore returns have been filed and verified, and almost all of them have been processed as well. So it's a humongous data that income tax department is processing nowadays. And you will be surprised to know that average time taken to process one ITR is only 10 days now. So they are very proactive. The systems are very good, and this is a particular e-filing portal which manages everything. In this portal, you can access almost all interaction, your ITR filings, your past returns, everything can be accessed from here. Any notices that if you have issued, if you have received, then you can access it from here. You can reply to those notices, and even the scrutiny assessments happen through the same e-filing portal. So there is one login, one portal for all your income tax needs now. Now, whether you are a resident Indian or NRI, income tax department is tracking all the financial information. A lot of detail is available with them. There are two statements getting generated on an annual basis. One is the AIS report, the other one is the TIS report. AIS report gives you a detail of all the transactions that you have done during the last year, whereas TIS is a summary kind of a report which gives summary under each income head. So what happens is, if anything which is reported here, if it gets missed or omitted in your income tax return, then there may be system generated scrutiny notices. So it's very important that you keep accessing these statements, you check your statements. And if there is any discrepancy, for example, if there is some income which is being shown in your PAN, which does not relate to you, it is not relevant for you. In that case, you can go and raise a query there that this is not for me, and then they'll rectify it. So you also have to be, you are expected to be proactive in the compliance and check these statements on a regular basis. Now everybody wants a tadka to their foreign investment portfolio, desi tadka, but then nobody wants income tax scrutiny. So these are the pitfalls to avoid the best practices in income tax. You need to update your address, residential status, and contact details on the e-filing portal. Make sure that you provide an email address and mobile number which you access regularly, so that if any notifications or any communication is received, you reply to it on a timely basis. You keep filing your return of income in India on a regular basis, just to prove that you're a non-resident, so that your global income should not be asked, or they should not bother you about what's happening in your global income or foreign bank accounts and all those things. So you have to regularly keep filing saying that you're a non-resident. Otherwise, they may have old data which says that you are a resident Indian, and due to the information exchange agreement nowadays, they come to know that you have let's say a lot of funds parked in your overseas account. So they may raise a notice saying, why have you not disclosed in your income tax return? Because they don't know you are an
Hmm.
NRI. So you have to keep filing your return just to prove that you're a non-resident. And then if you're filing your return, you have to disclose all bank accounts and assets and income generated in India in your ITR. You don't need to show your foreign assets or foreign income, whatever. You just need to show your Indian assets and Indian income. Now, this is another query raised on a regular basis, that my past CA used to do it when I was in India. I don't know my access to the portal. I don't have my password and all. So how do I access my income tax portal? It is very easy. You just need to log into your net banking. There is an option called as income tax e-filing. Through net banking, you can access this link, and then it will take you to the income tax portal without having the need to enter your password. And then you can go to my profile section, change your password and everything, and you can access your income tax portal anytime you want. So this is an easy way to access your portal. These are some of the special facilities for NRIs. NRIs are not required to link Aadhaar card with PAN card. Many of them do not have Aadhaar card. NRIs are also not required to disclose their overseas bank accounts in their tax return, unless they don't have any Indian bank account and they want a refund for certain. This happens in case of royalties and all. Um, and then third one is common for all, that the ITR filing date, that is the income tax return filing date, is 31st July. And if you are under audit, then it is 30th of September for the subsequent year. Now, This is a case with many NRIs right now. Last June or July, Income Tax Department has made PAN cards inoperative for those who have not linked Aadhaar with PAN. Now, if suppose you have not been regularly filing your income tax returns or your residential status is not updated as a non-resident, then Income Tax Department has by default made your PAN card inoperative. How do you check this? Is you simply log into your portal, and if you receive this error message on top, it means that your PAN is inoperative. Now, inoperative PAN is not an inactive PAN. Only thing is your refunds and all will get stuck. You can easily make it operative. The way to do is find your jurisdictional assessing officer. Even that link is given in your portal itself. You find his email ID. You send him an email with the requisite documents to prove that you are a non-resident for so and so years. So maybe your passport stamps, OCI card, your overseas driving license, or any address proof, you need to give them and say that for so many years you have not been in India, so you are a non-resident, and that is the reason why you have not linked your Aadhaar with PAN, and they will make it operative. They generally do it on a very fast time frame. Now, should you file your income tax return even if your income is below the threshold limit of 2.5 lakhs? What are the advantages? It substantiates your residential status. As I said, you can prove that you were an NRI for that particular year if you have been filing regularly. You can show your income sources. For property transactions, having a trail is very important. Then claiming refund for TDS deductions, you need to file your return. If there are any carry forward losses, then if you don't file your return on time before the due date, you cannot carry forward your losses and set it off in the subsequent years. So it's very important to file your return on time for that as well. To increase your financial eligibility in case you want to relocate to India, take loans and all. So to have a good CIBIL score, it is very important to keep filing your income tax returns. And then even if you have got any exempt income, let's suppose you have received a PPF maturity amount, which is a huge sum, which you have deposited in your bank account. So the credit in your account may be unusually high, but at the same time, you may not have filed your income tax return because it's an exempt income. So even in that case, a notice may be issued. So it's a best practice to keep filing your return, show your exempt income. You don't need to pay tax on it, but just there is a regularity, there is a proof that you have shown all that sort of income. So even if there is any communication in the future, you have a valid proof to show. Now, similarly, if TDS is getting deducted on your rental income and again the interest income on your NRO deposits, again you may argue that since the TDS is getting deducted, there is no loss to the exchequer. So why do I need to file my income tax return every year? So as I mentioned, Section 139(1) requires that if without claiming your deductions, like ATC deductions and all, without claiming that, if your total income is more than 2.5 lakh rupees in India, then you need to file your income tax return. If you don't file it, then it will attract penalties and scrutiny notices can be issued. And they are tracking all the information through AIS, TIS statements, which I showed earlier. So based on that, they have all the information already with them. It will be difficult for you to prove that your income was lesser than that. If they have valid proof, notice comes, then you need to comply. So it's better you keep filing on a regular basis. Now, NRIs, we have covered this, that they don't need to link their Aadhaar card with PAN card, but they can have an Aadhaar. Can they have an Aadhaar card? So the answer is yes. If you were a resident Indian earlier, you applied for Aadhaar card, you had an Aadhaar card, then subsequently you became an NRI. Still, you can retain your Aadhaar card. Secondly, if you have an Indian passport, still you can have your Aadhaar card. The only address proof mandatory is Indian passport plus an Indian mobile number, because the OTPs will come to that mobile number, and then you need to have an active Indian mobile number for that. So if you have an Aadhaar, you can use it for your OTP signing purposes and all, for income tax returns also. Now this is about double taxation. If you are an NRI, if you have already paid some tax in India or your foreign country, then do you need to pay tax on the same income in the second country as well? No, the answer is no, because India has signed a DTAA, which is a double taxation avoidance agreement with almost 85 countries. And based on this, I mean, these agreements ensure that no entity faces tax on the same income in both countries. So that avoids double taxation. So if you have paid tax in one country, you can go to another country and say, I need a credit for the tax which I've already paid in that country. And then if the DTAA is signed, then you will get a credit for that. Now, these are certain pitfalls to avoid in income tax as well as FEMA. Declaring residential status as resident Indian in ITR and not filing the requisite schedules. What happens is many people, they think they have an Aadhaar card, PAN card, so they will only declare their residential status as resident Indian and then for only show their Indian income in income tax return. So that is not allowed. If you are declaring yourself as a resident Indian, you need to offer everything for tax, whatever globally you have received. Secondly, there is a schedule FA which needs to be filled with all the foreign bank accounts, foreign assets held, everything. So it's a very tedious process. So do not do that. Assess your income tax residential status correctly and show that only. Second is, if you have maintained a saving account in one bank, let's suppose State Bank of India, you are having a saving account. In another bank, you have opened a NRO account. And if you want to transfer funds between these two accounts, even this is clearly a FEMA violation because in one bank you have given a KYC declaration that you are a non-resident, whereas in other you have given that you are a resident Indian. So that's a KYC, a FEMA violation. You should avoid that. Third is investing or purchasing property in the name of spouse or relatives by applying own funds. So if suppose one person is a non-resident, he has been sending money to India and asking his parents to invest that money in mutual funds or anything else, even that is not allowed. As per income tax, there are clubbing provisions which say that such income will be clubbed in the hand of the original source of that fund. So in his hands, the income should be clubbed. Secondly, even there are other stricter laws like Prevention of Money Laundering Act, which prohibits any Benami transactions. So it can fall under a Benami transaction as well, like the original source of fund is somebody else and the beneficiary is somebody else. So you should avoid doing that. Instead, there is a very easy way to invest in India through NRI, NRO route, and it can be done very easily. Next is engaging in any prohibited activities. Now, for non-residents, you are not allowed to buy farmland, farmhouses, or real estate business you cannot do in India. So, if you try to circumvent this through your saving account or through your relative's account, even that is not allowed because the ultimate source is a non-resident and the beneficiary is, trading into such activities. So that is a FEMA violation. Any questions, Karunya?
Actually, we have one, but for that we have to dial back a bit because this is about the NRO account. Christopher was asking, uh, basically, he has a saving account which he shares with his wife in India, and I'm assuming he is from the GCC area region. Asking if he should, he is required to change his account status to an NRO.
Yeah, so if the primary holder is a non-resident, then he needs to get it converted to NRO. And still,
Okay.
even if he's if the account gets designated as a NRO account, still his wife can be a joint holder there.
Okay.
It is
All
allowed
right.
to the relative, yeah.
Oh, okay. So there's one more query coming in from Pavan. He's asking if we long delayed the resident bank account to NRO, what is the procedure for that? And are there any significant penalties? Assuming that there are not significant financial transactions in this account. So does the frequency or the kind of transactions also have a role to play?
See, there are many dormant accounts. Generally, we open a lot of accounts, we forget about them. So there can be certain dormant accounts, or there can be certain accounts which you don't use at all, or they are not accessible. For example, you opened while you were working in some city, you moved back to another city, you forgot about it, or those cases are understood. But then what the law says is that you need to convert it to NRO account. So best possible, whenever at the earliest you can do it, you should do it.
Okay.
The
All
reasonable
right. I
is
think.
not defined in FEMA. So what is reasonable, we do not know. But then it's better to get it done as soon as possible.
Okay. I think we can proceed a bit more and then do the next round of Q&A.
So what are the investment options and strategies for NRIs in India? These are the 5 parameters of good investment. First is it should be liquid. Whenever you want, you should be able to withdraw it. Second, the returns should beat inflation. Third is the kind of risk that you are taking should be tolerable, commensurate with what kind of returns you are generating. And when we are talking about the returns, it should be assessed as net tax returns, how much in hand you are getting. And last one is, of course, the peace of mind. After doing that investment, you should not feel restless that where have I put my money in.
Yeah.
So India is a beautiful destination for such investments right now. There are different investment strategies that you can use. One can be a goal-based financial planning where to meet specific targets such as children education, retirement planning, or children marriage. For those goals, you can start accumulating wealth, investing in India. Second is through mutual fund. If you want to start, if you have spare, let's say $500 every month, if you want to start a SIP, which is a systematic investment plan. So basically investing in small proportion every month. So that also you can start in mutual funds in India. If you have a lump sum amount through sale of some property or anything, you can do that as well. There are certain tax-free investment opportunities also, which are basically insurance-linked products. So if suppose you invest for 10 years, after 20 years, you get a lump sum amount back, which is tax-free at the time of withdrawal. Such kind of insurance products are also available. There are portfolio management services, PMS services, where you basically give a power of attorney to a fund manager who will handle a demat account on your behalf, and he will do all the trades for you. So he is very well equipped with all the knowledge and all what is happening in the Indian market. You have to hand over your corpus to him, and he will manage that fund for you. Even that strategy is allowed. Next is insurance related products you can take for tax planning as well, like health insurance of your parents back in India. If you take, you can still avail 80D benefits against that. Or for life insurance, you can take, even for an NRI life insurance, you can take. So insurance related products are also available. And then there are for capital gain tax planning also, many people do like to do investments in India, like they sell one house property and want to reinvest to save the taxes on that. So those kind of strategies also you can adopt. Now, one particular very lucrative investment for NRIs is always property market. Housing loan is very cheap in India. Then there are tax concessions available, which make it cheaper. However, there are certain factors being an NRI you should consider before investing in the Indian real estate. Regarding the regulatory compliance, as we mentioned, agricultural land, farmhouse properties and all you cannot buy. Then there are tedious property documentation, and then the due diligence has to be done whether the property will be developed in the time frame which has been promised by the builder and all. There are certain funding restrictions, and then again the taxation. If you are buying a property to let it out, then there is a TDS applicable, which is 30% plus surcharge. So every month, 30% of your rent will be deducted and deposited as tax. So that significantly again impacts your cash flow. And then there are property management and tenant issues. You don't find a lot many brokers in India who manage it on a very professional level. So all these things have to be considered before you try to invest in India. Now coming to liquid investments, some of the equity mutual funds in the last 1 year, we have shown in this chart how they have performed. As you can see, the returns have been phenomenal in almost all categories. Even for the last 5 years, if you see all the type of funds, they have given double-digit returns. So Indian markets have been very lucrative for the last few years now, and let's hope that they will remain very bright in the future as well. Coming to the taxation part on mutual funds. Now, mutual funds are divided into three categories according to their exposure to the equity market in the domestic companies. One is those who have more than 65% investment in domestic companies, equity markets. Those are equity mutual funds, aggressive hybrid funds, balance advantage funds, arbitrage funds. If you hold them for more than 12 months, then you qualify it as a long-term capital gain. Now on long-term capital gain, first 1 lakh up to the gains of 1 lakh rupees is exempt. After that, it is taxed at 10% flat. If it's not held for 12 months, then it qualifies as a short-term capital gain on which the tax is 15%. Second category is where the exposure is 35 to 65% in the equity. These are balanced hybrid funds. If you hold them for more than 3 years, then you can avail 20% taxation with indexation benefit on that. If you don't hold for 3 years, then it will be clubbed with your slab rate. So whatever is your income slab, according to that, the tax will be applicable. Third category is debt funds, gold ETF, international funds, fund of funds, and conservative hybrid funds. Basically, these are the funds where the equity exposure is minimal, less than 35%. On that, it will be, as per the new amendment, it will always be considered to be a short-term capital gain and clubbed as your regular income. So slab rate of your income will apply to this. And of course, this is a new amendment. So before that, before 31st March 2023, whatever investments you have made, it will continue to enjoy long-term capital gain and indexation benefits. Any questions?
Actually, there are quite a few questions that have been lined up for you. Most of them are banking and bank account related. Would you want to take them right now, or would you want to take them at the end?
We will take them at the end then. We'll just finish this.
There's
There are,
one
yeah.
investment related
Yeah.
from Santosh. He's asking, will the insurance linked products be tax free if done through NRO account?
See, NRE and NRO does not make any difference. Taxation, and if you do investments through NRE, it is freely repatriable. If you do through NRO, it is non-repatriable. But then you can use the USD 1 million facility every year. So, taxation point of view, NRE and NRO does not make any difference. Now, you have to see whether what kind of insurance product you are buying, whether it is giving you tax-free returns or not. If the returns are tax free, then definitely yes. But having said that, your income tax return, income tax in India may give it exempt income, but then you have to offer that to tax in your home country as well. So I don't know which country is he from, but then there he has to show that income, and if there is tax applicable, he has to pay there.
Okay. Sri also has a query. He's asking, if I live in a country like Singapore without capital gains tax, what are the tax implications for my investments in India, including the income generated from Singapore? And he's asking if he's exempt from paying taxes on interest and capital gains because of DTAA.
So DTAA, I'll come in the next slide and then I'll address the Singapore query as
well. Sure.
It is already there.
I think we can go ahead, and the other mixed bag of questions we can address at the end.
Okay, sure. DTAA, we spoke about that this is to avoid taxation in both the countries. Now, DTA is signed between India and countries such as US and UK, specify that, mutual fund proceeds which are invested in India, those will be taxed in Indian jurisdiction itself. But there are other DTAA like with Oman, Qatar, Kuwait, Saudi Arabia, and UAE, which say that it will be taxed in the foreign country. Now, this brings a very beautiful situation wherein you can take a tax advantage. Like some countries such as UAE, they don't levy capital gain tax on mutual fund investments. So if you are from UAE who has invested in India in mutual funds, the Indian tax authorities do not have the right to tax it. So even if there has been a TDS deducted on your income, you can claim it as a refund, and then you can go back to your home country and offer it for tax, but there is no tax there. So it becomes completely tax exempt. Now, similar is the situation with Singapore for mutual funds, but not for shares. Shares will be taxed in that country itself as per the DTAA. That's all from my side. We can take the questions now.
Yeah, there are quite a few lined up, so I'll just get right to it. Shoaib is asking us, can I claim tax refund on capital gains from stocks under DTAA?
It depends on what kind of DTAA. I mean, which country is it?
Hasn't mentioned, unfortunately.
Yeah. And secondly, generally for shares, it is taxed in India itself. So generally for shares, there is no exemption.
Okay. Same viewer is asking if capital gain on ULIPs is taxable for NRIs.
It is same as resident Indian. So it depends on how much is the amount that you have invested. For ULIPs, if you are investing more than 2.5 lakhs per year, then it becomes taxable. So you have to check whether it is taxable or not. If it is not taxable for resident Indian, it won't be taxable for you as well.
Okay.
Yeah.
Kazim Hussain has a question. He's asking if we're in India and we don't have any income for the period we live, uh, still our NRI status will be gone. And again, if we go to another country for a job, then again the NRI status will be there. How does it play out if he's like going back and forth and moving base from one country to another with India, coming to India in the middle?
So, as I've explained this, there are two acts which you need to check. One is a FEMA and second is the Income Tax Act. For FEMA, you need to see what kind of residential status do you have. If you come back to India for an indefinite period, then from day one you become a resident Indian as per FEMA. So you do that process again. You have to redesignate your NRO account to saving account. You have to convert all your foreign currency things to resident foreign currency accounts. So all those things have to be done the moment you become a resident Indian as per FEMA. But as per income tax, only for the last financial year, you have to go and check whether you were in India, for how many days you were staying in India. So according to that, you have to offer it for tax. So there are two different concepts. One is the bank account, which is governed by FEMA, which broadly goes by the purpose of your visit to India or outside India. And second is the Income Tax Act. So both are different concepts. You have to check from both the angles and then do the whatever things need to be done. You have to comply.
Okay, all right. Hubert Satish is asking, can I get refund on TDS, which was deducted 2 years ago? That's all the details we have. So, what do you think?
No, unfortunately, now if you don't file your return before 31st December of the next financial year, then you cannot file a return just to get a refund. So a return
Huh.
can still be filed, which is called an ITRU updated return, but that is only in case you have missed to report any income. So if you want to come forward and pay tax, you can file it, but not for refund purposes.
Okay. Moving on, Satya Seelan is asking whether we can transfer money from savings account to NRO account. How does that work?
Yeah, you can do that. Saving account to NRO account. I mean, what is the purpose that is important? If your parents are giving it to you as gift, then it will qualify as a LRS. But then, if it's from for rental income or anything else, then you can take it definitely.
Okay. Next is from Alagar Perumal. His daughter has a PPF and Sukanya Samriddhi account, and the wife has a PPF account and savings account, which were opened before they moved to the UAE, and they have been there with Alagar Perumal for the last 12 years. So what happens now?
So PPF account you are allowed to open when you are a resident Indian only. But when you change your residential status to NRI, you don't need to close it. So if it was for 15 years, you can still maintain it. You can still deposit. The deposit will happen only through your foreign exchange coming into India. So you can deposit through
Okay.
NRO or NRE route and you can still maintain it. At the time of maturity, you can withdraw it, but you cannot again extend the tenure. So since your status has changed, you cannot extend it or anything, but you can continue to hold it till the maturity.
Okay. Shri has a question. Is there a specific reason why income from NRE FDs isn't taxed, while interest and capital gains on stocks, mutual funds, etc., are taxed for NRIs?
That is as per Income Tax Act and there is no tax on the NRE deposits. Maybe we want foreign exchange coming into India. That may be the reason that they want Indians residing abroad to open fixed deposits in India through their forex reserves and all. So that can be one reason, but I'm not sure.
Okay. Arvind is saying, what about NRI broker charges? Is there a range or is there a typical rule of thumb that one can follow?
What? Sorry, brokerage charges.
Yes, NRI broker charges.
It depends whether you are doing it through the NRO route or NRE PIS route. So if you are investing in India through NRE PIS, then the charges are slightly higher. But for NRO route, it is similar to what residents have to pay. It's not much.
Okay. Next is a query from Amol. NRIs can we invest in mutual funds using resident account? Is that possible?
No, we have covered that.
Yeah.
Basically, using a resident saving account is not allowed. So you need to convert it to NRO account. Even the demat accounts, you need to convert to a non-resident demat account. The process is simple. You just need to do KYC. But after doing that, you can easily invest in India.
Okay. Mukta is asking for a US citizen who receives their relatives' NRE funds with DMAT linked to NRO. Should one pay IRS tax or Indian income tax?
Sorry, can you repeat that, please?
So it's a US citizen, for a US citizen who receives his relatives' NRE funds with DMAT linked to NRO. Will they pay IRS in the US or will they be liable for Indian income tax?
So if the income is originating from India, if the source is Indian income, then you have to offer it for tax in India first. And after paying that tax, since we have a DTAA with US, you can go and claim credit for the tax you already paid in India. But if it is just a kind of a gift coming from your relative from India to US, then you have to pay tax in US.
Okay. Rais is asking, do I need to pay tax for mutual funds if I'm working in the UAE? Kapil also has the same question. Capital gains tax on mutual funds in India while they're working in the UAE.
No, as per the DTAA that we mentioned, they are exempt from paying mutual fund tax in India. Indian tax authorities do not have the right to tax it, but the TDS will get deducted. So they have to go ask for a refund of that TDS, and then only the process can work out. For that, they
Okay.
need a TRC, which is a tax residency certificate from UAE. So that is another cost which they need to incur. I think it's around 1000 AED which they need to spend to get that TRC plus the cost of whatever CA fees they have to pay. But if the income is substantial, then they can do that. Obtain a TRC and claim the refund of whatever TDS has been deducted. Yeah.
So Asif from Oman and Hubert from Bahrain have written to us, and Asif, who's from Oman, is asking whether there's any exemptions, tax exemptions in mutual funds, debentures, etc. And even Hubert has a similar question, but from a Bahrain standpoint, if the gains from MFs are taxable in India or in Bahrain.
See, I don't think there is a DTAA with Bahrain. So in such cases, what happens is the tax has to be paid in India. And if Bahrain tax law provides for a unilateral relief, which means that even if you have paid tax in any country with which they don't have a DTAA agreement, still they will offer you credit. If that kind of income tax law is there in Bahrain, then he can take credit for that. Otherwise, no. First point of taxation will be in India itself.
Okay. Ashish is asking if someone has filed an ITR being an NRI, incorrectly they've shown their status as resident for the last 2 years, but now they're back in India. So will they have any repercussions? Will there be any complications, penalties, etc.?
Yeah, if you have shown that you were a resident Indian, then you need to show your global assets. You have to offer it for tax in India, the total global income. You have not done that earlier. So if there is any notice in the future, you have to go to the assessing officer and explain that by mistake you have done that, and he may agree to that. But going forward, I mean, there is no need right now to go and correct those returns.
Okay. Next is a question from Dhaval. He's from the UAE. He's been living there for 14 years and he wants to know whether TDS on share sale profit in India is refundable from income tax and if there's any refund cap. Could you advise on that?
Taxation on the mutual fund, the shares is there in India. So he will have to pay tax in India on the shares amount. Shares income, whatever it is getting generated, he has to offer it for tax.
Okay.
For any consultation with regard to tax planning and all, we can do an individual consultation.
Okay. Arvind wants to know if NRIs can invest in all kinds of equity mutual funds or are there specific funds which are open to NRIs?
So the restriction is only for US and Canada NRIs due to the extensive FATCA compliance that they have. Many fund houses don't accept their applications. So there are very few fund houses who take investment from USA and Canada. Apart from that, there is no restriction that you cannot apply to such category or something like that. There is no such restriction.
Okay. Mohammed has savings, some money in their NRE account and asking if they need to file an income tax return.
Yeah, I mean, it is better to file your income tax return, show your income, and say that it is exempt income. It is always better to do that on a regular basis.
Okay. Okay, lots of questions actually, interesting ones. Satya Seelan is asking, they invested in India when they were in India in some mutual funds. Now they've moved to the UAE and have changed the status to NRI. So now if they are taking those mutual funds out and sort of closing them, can they avoid capital gains?
No, capital gains would apply in any case. I mean, even if you invested through NRI status or resident status, capital gains will always be there. So what you need to do is you have to change the demat account to a non-resident status first, then designate your saving account to an NRO account first, and then only take the money in that NRO account. That's it. But tax will be applicable.
Okay. So Mohammed is also asking if they convert their savings account to NRO, but then later can they convert it back to savings if they decide to
Yes.
move back?
Yes. So the process is very simple. You just need to do your KYC. If you are a resident, it will become saving account. If you are a non-resident, it will become a NRO account. That's it. And most of the banks do it in a very fast way. So there's no problem at all.
Okay. Mukta says, what about Bitcoins bought outside India and transferred to NRE accounts? How does the taxation work there?
Again, this is a point of individual consultation.
Okay. Never mind. Maybe you can take it offline with them. They can write to you, and we'll share the coordinates at the end of the webinar. Moving on, how long does the TDS refund in India typically take for NRIs from countries which don't have capital gains tax? This is a question from Shri.
There's no difference between a resident Indian income and a NRI income. As I said, the typical timelines are only 10 days to process a return right now, and refund you get within a few months. So 1 or 2 months is typically what we have seen in the last assessment year. So it is very fast nowadays. It does not take a lot of time, and there is no difference like you showed something in your return. That is why it will take longer time. It's not that way. Only if there are any queries or any communication from the department, then the refund will get stuck. But apart from that, there is nothing as such which will stop the refund.
Okay. Alagar Perumal says, what is the certificate required from UAE to claim mutual fund tax exemption?
It is the tax residency certificate, TRC.
In fact, Jyotish has a pertinent question to that. They're saying, is it mandatory to obtain a TRC?
Yes. So to prove to the Indian income tax authorities that you were a tax resident in some other country, and that country being a UAE, you need to obtain a TRC. If you don't have it, then it will be difficult to get the refund.
Okay, all right. We have another query that was sent to us from Hillary, who is in Bahrain. She's an NRI invested in share market, but wants to settle eventually in India. So they're asking if they can continue their NRI demat account for trading.
It will be redesignated to a resident demat account as soon as they become an Indian resident. So the moment they enter India to stay for good, they have to go to that demat account and convert it to the resident demat account. But that same demat account can be used.
Okay. Siddharth also has written to us. He's from Bahrain as well. He's asking, when NRIs move back to India, does taxation starts accruing on international investments from day one, or is there any sort of grace period?
No, there is a transition phase. The status is called as RNOR, which is resident but not ordinary resident. So if you're moving back to India after, within 5 years, then immediately everything will become taxable. But after 6 years or so, you can avail that benefit up to 1 year, depending on how many times you have visited India. And then after, more than 10 years or so, you will get the transition for 2 years. RNOR status can be availed for 2 years. So it depends entirely on how many days you have spent in India.
Okay. Prakasan from UAE says he has an NRE account, but NRO account is being used for mutual funds and stocks. So he says, according to you, which bank account is best for buying shares and buying mutual funds, whether it's NRO or NRE for an NRI?
Yeah. So if you are investing from outside India, then NRE account is the account which is specifically designed for this purpose, so that your investments are freely repatriable. You invest in India, whatever income is getting generated, there will be a TDS on that. But after TDS, whatever net proceeds come back to your NRE account, you can freely take it outside India. So it
Okay.
is very easy to do investments through the NRE route. NRO route becomes non-repatriable. So if you want to remit outside India, then again you have to do a lot of compliance. So the better way for
Hmm.
global income to be invested in India, we always suggest through NRE route.
Okay. The last question that we're taking for today is from Balaji. He's a returning NRI who's come back home and asking, as a returning NRI, I wish to clarify if my FCNR deposits will be taxable after my status change to resident Indian.
Yeah, welcome back to India. So Balaji, your non-resident accounts will get, those deposits can be converted to RFC, which is a resident foreign currency account, and there is no tax on that till the time of maturity. In India, it won't be taxed. But having said that, the interest on that is very low, and secondly, TDS will still apply on that. So you need
Hmm.
to assess whether it is advisable to keep money in that or not. But then it's not taxable till maturity.
Okay, we still have a barrage of questions, but we are pressed on time. So, guys, you all can coordinate and take this offline and talk to Sagar, email Sagar rather, and get your queries answered. Eventually, if you have specific tailored queries, specific issues that you're struggling with, please feel free to reach out to us after this webinar online, and we will certainly respond back. Thank you so much, Sagar, for joining us. Any closing thoughts or any, word of wisdom that you'd like to leave for all our NRIs who are still very much active in the Indian market or in
Yeah.
the banking space?
So I feel consulting a professional is very important for NRIs, because there are a lot of laws and regulations which you need to follow, and then only you should take any decision. So that is very important. Apart from that, don't play with FEMA rules. The repercussions are very high. Income tax is more of tax based, so you can still pay penalties and get away. But FEMA is a very strict law, so comply with FEMA properly.
Well, all right. So, compliance is what this webinar has been about, understanding the rules with respect to your residential status, your taxation liabilities, and comply. And please, NRI, whoever has followed our channel, our content, that has been one thumb rule that we always tell our viewers to follow. Please download the Groww NRI app as well. Give us any feedback, suggestions that you have. Go to our YouTube channel as well, Groww NRI, where we keep posting very, very relevant, topical, insightful content for all you NRIs who are based across different parts of the world, but have one eye focused back home in India, and several aspects of investing, of money management, taxation, and much more. So, guys, thank you so much for tuning in. Sagar, thank you for your valuable inputs, your suggestions, and helping our viewers out. With that, it's a wrap from us. Thank you for tuning in and have a great weekend.